afternoon, traders. It's Bill Baruch with Blue Line Futures Intradaily Midday Market Minute. The story of the day is yields. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. And if you're watching our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love for you to follow us. We'd love for you to help us build our following. Yes, the big story of the day is yields. Yields across the board are rising, and it's not the 2-year leading the way here this time. It's actually seeing the 5-year, the 10-year, and the 30-year all melt lower. The prices are now reaching the lowest level since early March, and that means higher yields. And higher yields really holds back the risk sentiment. It's likely having a hand in keeping that sort of early rebound in the NASDAQ in check for sure. But the interesting thing is these higher yields come on a day after the services PMI data in China missed, services data in Europe was weak, and we've seen the ISM manufacturing here from the U.S. on Monday missed. Factory orders today also missed. So despite the bad data, yields are continuing to rise. A lot of issuance coming from the Fed or from the Treasury, obviously, since the debt ceiling. That's had a big hand in this, but this is definitely one of those days where it's surprising to see yields moving as much as they are. This shows you the sort of the undertone within the market, given the bad data. But it also comes ahead of ISM non-manufacturing. The services data tomorrow is going to be a big one. We also have ADP payrolls, first look at jobs before non-farm payroll. The June report is due on Friday. So a lot of data to finish out the week, and it's going to be it's going to drive that yield story. So we're seeing the equity markets actually hold in pretty good. So the S&P did go down, stick its nose below 44.71, traded 44.66. That area, that's our support at 65. We've seen the market rebound back up and really trade unchanged on the day, basically, and sort of waffle back lower here to the Fed minutes. So it's been a little bit of a consolidation day. And that's exactly what you want to see after a big move like that to finish out the quarter, where we had a melt higher, a lot of window dressing, momentum, and then just a big move. I mean, from the entire quarter, from the entire first half of the year, closing out very strongly and being able to hold these levels and digest, I think, is a very good thing. The NASDAQ did hold major 3-star support. We talked about in the Morning Express, responded off that, set a new high, so we've kind of consolidated. So this is just digestion mode ahead of the ISM non-manufacturing, and then jobs, the non-farm payroll on Friday. So if we continue to consolidate and we get favorable data, I mean, I don't see anything that's going to hold this market back from continuing to set new swing highs, new cycle high after new cycle high. I think that's what we could be in store for here. Watch the Russell closely. Russell did pull back a little bit, and it's right at some resistance that it did run into the 1900 area. Got clearly out above there, but now we're back below. Watch that consolidation. I'm watching Russell 2000 very closely. If that can really get going, to tell you that the broader theme of sort of risk on allocating in the market is very alive and well. So watch that. Moving on, the crude oil, it's pinged $72. It's been up there. It's hanging right pretty good. We've seen some news from OPEC Plus trying to get new members, Mexico being in the talk there. We've also have Saudi Arabia and Russia reaffirming their production cuts. It's been a tailwind to that market. So crude oil has been really able to shake off this China services read. And overall, I think seeing some maybe demand pick up. And we had those, or at least what's seen the EIA data. We've had the big builds that started to come back to the mean on last week's report. What do we get on this report that should be out tomorrow? We'll kind of see how this kind of takes things. But I like the fact they're moving into 72, kind of shaking off China. It's a good thing to see, but a lot of resistance highlighted on the Morning Express above 72. And then looking at the metals, we saw gold make a nice move out above 1940, couldn't hold it. Now we're back below 1930. Silver its move on the day is a little more sticky. It's trading out above 2330, 2329, 2330 is a big level. So trading out above there, holding that is pretty good, but it did get out above 2350. So it's coughed up some of its gains. Same thing with copper. Copper had a big finish to the back half of last week. It traded pretty sharply lower on the China data, but it's trying to recover back to 377, trying to hold it in there. We see a lot of support 76 to 77. If it can hold that, it really failed at where the 21-day, the 54-day, the 200-day moving averages against the highs of last week. We're all there converging, and so you have the China data, but also some technical resistance. But again, with the poor China data comes the weakness in the Chinese yuan, which is that C&H contract for the CME. That means that's making new highs. When that makes new highs, that's the dollar strengthening, and the dollar is strengthening today. So we got the yields moving higher. We got dollar strengthening going into tomorrow's data, and our team is here to help. So don't hesitate to reach out. Our trade desk is here at 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.